Hello and welcome to the Weekly Outlook at XM.com. This week, the RBA will announce its interest rate decision, while on the data front, we'll get Canada's employment report and the GDP numbers out of the UK for the last quarter of 2022, which will shed some light on whether the UK can avoid a recession. I'm Maria Pachardves, and joining me to discuss all this is lead investment analyst Rafi Boyadjian. So Rafi, let's start over in Australia, where inflation accelerated back in December. Can you tell us about the current state of the Australian economy and what the Reserve Bank of Australia is likely to announce on Tuesday, and how that might affect the Australian dollar?
Well, Maria, we are getting some signs that the Australian economy is slowing. We're seeing slowdown in the housing sector, and the recent PMIs have been rather weak as well. But the labor market does remain quite tight. But more importantly, we did see inflation actually spike towards the end of 2022. It did rise above 8% in December. So although this wasn't too far from the RBA's own prediction of where inflation would be towards the year end, it does highlight that there's still some upside risks as far as inflation is concerned. And of course, China's reopening adds to these upside risks. So the RBA will probably hike one more time by 25 basis points. And they may keep the door open to rate hikes, so they could signal that maybe some further tightening might be needed. And this could bolster the Australian dollar because markets are leaning towards a pause. Of course, we can't rule this out. We're seeing other central banks also hint that they could be pausing soon. So if the RBA were to hike rates but signal that they will be pausing after that, then I think that would still probably come as a little bit of a surprise to the market, and we could see the Aussie coming under pressure.
Moving over to the UK now, the British economy is really struggling due to multiple factors, including sky-high inflation and, more recently, strike action by public sector workers. GDP numbers for the last quarter of 2022 are due on Friday. Do you think the UK will manage to avoid a recession?
Well, the cost of living crisis, as you said, seems to have been more accentuated in the UK than in some other countries. Inflation has been higher, and the gas and electricity bills are taking longer to come down now, despite the big drop in energy prices. But like in the euro area, some of the gloom has been overdone, and GDP is in fact expected to have been flat in the fourth quarter. So this would mean that the UK would avoid a technical recession, but it does not necessarily lift the uncertainty and not necessarily boost sterling, because there's a strong chance that the economy will contract in the first quarter of 2023. On top of that, the Bank of England has hinted that it's reaching the end of its tightening cycle. So even if we were to get some positives from the data, any boost to the pound would probably be temporary.
Turning to Canada now, we'll get the employment report on Friday. What are we expecting there, and how might the loonie react?
Well, like in some other countries, like the UK and Australia, the tight labor market is also a reality in Canada. So there is this risk of wage pressures building up, and which would be a concern, of course, to policymakers. And last month, we did see a big jump in employment. So another big increase in job gains in January would suggest that the monetary tightening hasn't gone far enough. Yet the Bank of Canada has just signaled that it will pause before deciding whether or not to further hike interest rates. So unless we see some very big surprises in the data, whether to the upside or the downside, it's unlikely that the loonie will react much to the jobs numbers and will be driven more by the broader risk sentiment in the markets.
Right. And finally, over in the US, it will be a fairly quiet week in terms of data releases, with the main one being the University of Michigan's preliminary consumer sentiment survey. And on Tuesday, Fed Chair Powell will speak at the Economic Club of Washington. What will traders be watching for there?
So that is right. It's looking fairly quiet on the data front. Now, the University of Michigan's Consumer Sentiment Survey is pretty important. It does show it's basically a forward-looking indicator on consumer sentiment, and also the inflation expectations component of that survey is closely watched as well. And recently, we have been seeing some encouraging signs there. So it does have the potential to move the dollar. But as you said, the more important thing for investors is what Powell might say on Tuesday, because he did give some mixed signals in his press briefing after last week's FOMC meeting. So, if he does come across as a bit more hawkish this time, then that could really lift the US dollar, because he did actually sound somewhat less hawkish, kind of even maybe a bit dovish. So definitely it's going to be important what he says as far as, just how many additional rate increases the Fed is planning for this year.
Rafi, thanks so much. And thanks for joining us at xm.com for this weekly outlook.